a 42.7% surge in closed sales compared to early February, coupled with a median price point of $381,500 that continues to defy national trends. Whether you're looking to buy, sell, or invest here in Southwest Florida, these next few minutes contain the actionable intelligence you'll need to make informed decisions in this rapidly evolving real estate market. With that said, let's continue on with this week's market trends. Let's begin with the cornerstone metric that everyone watches, median sales price. As of May 3rd, 2025, our region's median home price stands at $381,500, representing a week-over-week increase of 3.4% compared to the last week of April. But what's truly telling is the year-to-date comparison. We're seeing a 4.7% increase since February 1st. Now, what does this steady upward trajectory mean in practical terms? For one, it signals sustained buyer confidence in our market despite national economic headwinds. While many northern markets are experiencing price corrections or plateaus, Southwest Florida continues its upward momentum, albeit at a more measured pace than the frenzied appreciation we witnessed in 2023 to 2024. Breaking this down by property type, single-family homes are leading the charge at a median price of approximately $459,000, while condos and townhouses are maintaining slightly more affordable entry points around the $395,000 mark. What I find particularly significant is how stable these price increases have been. This suggests we're entering a more sustainable growth pattern that benefits both buyers and sellers, where prices appreciating at rates that outpace inflation without triggering an affordability crisis or pricing correction concerns. For sellers, this means the market to reward strategic pricing, not too aggressive or certainly not too undervaluing your property either. For buyers, each week of hesitation potentially means thousands in additional costs, but the good news is we're not seeing the desperate multiple offer situations that were common during the pandemic era buying frenzy. Turning our attention to inventory metrics, we're observing some fascinating developments that directly impact your negotiating position, whether you're buying or selling. Active inventory currently stands at 30,641 properties across our coverage area, representing a 2.5% increase compared to February, but interestingly, a 3.5% decrease from just last week. This recent inventory contradiction after months of gradual expansion tells an important story. It appears that buyers are absorbing new listings at an accelerated pace, with 956 closed sales last week alone, a remarkable 42.7% increase from February and a 23.4% jump from late April. This buying activity is starting to outpace new inventory coming to market despite the 1,349 new listings that appeared this past week. The median days on market figure sits at 61 days, representing a 17.3% increase since February, but only a 3.4% increase from last week. What this tells us is that while properties generally take 2 months to sell in our current environment, the pace is starting to accelerate again after the seasonal slowdown we typically experience after Easter. Most revealing is our weeks of inventory metric, currently at 32.1 weeks, which is representing a significant 28.1% decrease from February and another 21.8% decrease just from last week. For context, a balanced market typically shows between 24 to 36 weeks of inventory, so we're moving from what's briefly a buyer-friendly environment back towards a more balanced market condition. What does this mean for you? For sellers, the window where you face less competition is beginning to narrow. If you've been waiting for the right time to list, these inventory contractions suggest that time might be approaching. For buyers, the selection remains historically good, but the days of abundant options and minimal competition appears to be waning. The decreasing weeks of supply, combined with increasing closed sales, points towards a market that's regaining momentum as we head into summer. No market analysis will be complete without addressing the critical factor of financing costs. As of May 7th, 2025, 30-year fixed mortgage rates for conventional loans on a single-family home and condominiums are sitting at 6.625% with an APR of 6.683% for loan amounts up to $802,650. This represents a notable shift in our financing landscape and directly impacts purchasing power across all pricing points. Let's contextualize what these current rates mean for buyers in our market. Using our neighborhood spotlight area for this week, which is north for buyers, the median home price is at $286,000. And assuming a conventional loan of 20% down, the typical home buyer there is looking at a monthly principal and interest payment of approximately around $1,400. For our broader regional median price of $381,500, that means monthly payment jumps to approximately around $2,000, numbers that have significant implications for affordability metrics. The rate environment varies significantly by loan type. FHA loans currently offer the most attractive options at 5.125% with an APR of 6.697%, translating to a payment of $556 per $100,000 borrowed. However, for second-rate homes, rates climb to 7.25% for conforming loans and 7% for jumbo loans, reflecting lenders' continued risk assessment on non-primary residences. What's particularly interesting for investment-minded buyers is the portfolio lending landscape, with 3-to-1 ARMs currently at 8.24% for primary residences, but 9% for other properties. This nearly 75 basis point spread underscores lenders' preferences for owner-occupied transactions in the current economic climate. The most revealing affordability metric is the relationship between mortgage rates and price per square foot. Again, for our neighborhood spotlight area for this week, North Fort Myers, where the median price per square foot stands at $166. Current financing translates to a monthly payment of approximately $1 per square foot of living space. Compare this to areas where price per square foot exceeds $300 and a payment approaches nearly $2 per square foot, a difference that dramatically impacts the value equation for buyers deliberating between locations. For sellers, understanding these affordability dynamics is crucial for effective pricing strategy. The sweet spot for maximum buyer demand appears to be properties that deliver monthly payments between $1,800 to $2,200, right in the range where our regional median currently sits. Properties requiring payments significantly above this threshold are experiencing extended marketing periods unless they offer exceptional features or locations. Looking ahead, mortgage professionals are signaling a potential stability period through summer before possible modest rate decreases towards year-end. For buyers facing today's 6.625% environment, this suggests two strategic approaches. Secure properties now at current prices with the option to refinance later, or wait for potential rate improvements while possibly facing higher purchase prices. The math increasingly favors the formal strategy given our region's continued price appreciation trends. Each week, we spotlight one neighborhood showing particular market strength, and this week our focus turns to North Fort Myers, an area experiencing a remarkable renaissance. With the latest data just released, North Fort Myers is showing some fascinating trends that both buyers and investors should be paying close attention to. The median sales price in North Fort Myers now stands at $286,000, representing a robust 5.9% increase compared to the previous week. Let's put this in perspective. At $286,000, North Fort Myers offers a median price point approximately 25% below our broader regional average of $381,500, yet is appreciating at a pace that rivals or exceeds many premium neighborhoods. The price to appreciation ratio is creating what smart investors recognize as a value pocket with substantial upside potential. Last week alone, North Fort Myers saw 39 closed sales, an 11.4% increase from the previous week, demonstrating growing buyer recognition of this area's value proposition. The price per square foot metric tells an equally compelling story. At $166 per square foot, up 12.2% week over week, but still significantly below the regional $257 average, buyers are receiving nearly 55% more house for their North Fort Myers while still enjoying strong appreciation. This explains why just last week, I had a friend who's also a realtor who worked with clients who pivoted their entire search to North Fort Myers after initially focusing exclusively on South Fort Myers and Cape Coral. Their waterfront property off Hancock Bridge Parkway delivered dramatically more space and superior water access at a price point simply unavailable elsewhere in the region. Looking at the market dynamics, we're seeing a median days on market at 63 days, up 13.5% from last week, but still reflect reasonable liquidity, with active inventory at 1,043 properties, which is down 3.1%, and new listings increasing by 18.4% to 58 properties. We're witnessing the early stages of what could become a competitive environment as inventory contractions meet increasing buyer interest. What's driving this transformation? Three key factors. First, the completion of major infrastructure improvements along US 41. Second, the spillover effect from Cape Coral's eastern expansion, creating natural market pressure. And third, a coordinated county revitalization initiative that's attracting significant commercial investment. For buyers seeking value with strong appreciation potential, evidenced by the remarkable 12.2% increase in price per square foot, this formerly overlooked pocket deserves serious consideration in your property search. This pattern of revitalization to previously secondary markets is something we're tracking closely across Southwest Florida, and North Fort Myers represents one of the most compelling examples of this phenomenon, offering both immediate value and substantial future upside for today's strategic buyers. As we synthesize all these metrics, several actionable patterns emerge that directly impact your real estate decisions this month. First, we witnessed what I call a vertical shift. A dramatic 42.7% increase in closed sales, coupled with decreasing weeks of inventory, signals acceleration market momentum that typically precedes stronger price appreciation in the coming months. Second, the divergence between new listings, which is up 4.7% week over week, and active inventory, which is down 3.5% week over week, confirms that buyers' absorption is outpacing new supply, a classic indicator of strengthening seller advantage. Third, the relatively stable list price receive ratio of 94.5% suggests we haven't yet entered a multiple offer environment, but the trend is moving in that direction. For sellers, these emerging patterns suggest three specific strategies. First, price realistically rather than aspirationally. Properties priced within 3 to 5% of recent comparable sales are moving most quickly. Second, consider listing sooner rather than later as competition appears to be decreasing. And third, invest strategically in property presentation as buyers remain selective despite increasing velocity. For buyers, I recommend three corresponding approaches. First, accelerate your search timeline as inventory constraints are beginning to reappear. Second, ensure financing pre-approval is current as multiple offer situations may return to desirable properties. And third, expand your geographic search parameters to include emerging value areas like North Fort Myers that we discussed earlier. Perhaps more importantly for both buyers and sellers, recognize that we appear to be entering a transitional market phase, moving from the balanced conditions of early 2025 back towards a modestly seller-favored environment. These transition periods often represent ideal buying and selling windows before the market fully commits to its new direction and corresponding pricing structures. As we wrap up this week's Southwest Florida's weekly market updates, let's recap the essential takeaways that should inform your real estate decisions in the coming days. Our regional median price of $381,500 continues a steady upward trend, with closed sales surging 42.7% since February. Active inventory remains historically healthy at 30,641 properties, but the 3.5% week-over-week decline suggests a potential shift towards a more competitive environment. The median 61 days on market provides a reasonable timeline for both buyers and sellers to operate without undue pressure, while the weeks of supply contracts to 32.1 weeks signals we're approaching a more balanced market after months of buyers' advantage. These metrics combine to create what I believe is an optimal decision window for both buyers and sellers before our market potentially accelerates into the summer months. If you have made it this far into the video, I want to thank you for watching all the way to the end. Before you go, if you found value in today's market analysis, please like the video down below and subscribe to our channel, and also leave any thoughts or comments down in the comment section below. Your engagement helps us refine our content to serve your better needs, and I personally reply to every comment down in the comment section. Until next week, this is Service Pierre with Southwest Florida's weekly market updates, helping you navigate Southwest Florida's real estate market with confidence and clarity. Thank you for watching, and I'll see you next week with a fresh market update video. Thank you.